In this video, I'm going to talk about two stocks that I purchased and that you should buy as well. They're going to print juicy premiums for the weeks and months to come. Let's dive right in. We're going to talk about the first stock, and you guys probably already know what this is because I talk about it a lot, and it is Sofi. With the rates being cut in the next couple of weeks, the third week of September that is, and consistent rate cuts going forward to get the interest rates down quite a bit and to the desired level, that is going to give a lot of breathing room to Sofi. Especially the fact that Joe Biden's on-ramp for student loan forgiveness is over at the end of September. And if PMI data is good and the economy starts to recover and things go well in that direction, Sofi is going to start printing like crazy. They also have Anthony Noto, who's a phenomenal CEO and likes to under-promise, over-deliver. They've beaten every single earnings for the past 4 or 5 quarters in a row. So I anticipate this is going to continue on. So my average price with Sofi is $6.30. Which is a very good price to sell covered calls right now. But I try not to do that because if I sell $8 covered calls or $8.50 calls and get assigned, I lose my average cost of $6.30. This is not a stock that I like to wheel. This is a stock that I like to stockpile, hence the name, stockpile, right? Right? Come on, you know that was a good joke. It was a good joke, right? Come on, it was funny. In any case, we just want to put this stock in our account and pile it up and keep dollar cost averaging. If the stock price is above your dollar cost average, who cares? Keep adding. When it drops, keep adding. Just keep adding shares. If it's under $10 or even under $9, keep adding shares. I believe in Sofi and it's going to do very, very well. Let me show you how you can jump into Sofi, sell puts, show you the chart, show you why I think Sofi is a very strong play. However, before we dive into that, I have a huge announcement this Friday, September 6th, which is tomorrow, 7 p.m. Eastern Time, 4 p.m. Pacific. I am hosting my masterclass webinar. You do not want to miss this. It's absolutely free. Spots are limited. I am going to be making a huge announcement during this webinar, and I'm going to be taking a Q&A to answer all of your questions. You're going to learn more in this 1 hour than you will anywhere else. This is something you don't want to miss out on. The link is in the information box below. Click the link, sign up, check your email, and check your spam to make sure you're confirmed and signed up. Limited spots remain, and once the registrations are full, we will be shutting registrations down and you could miss out. The last webinar, there was close to 1,000 people emailing me saying they missed out. Do not miss out on this webinar. It is going to be a barn burner. You guys can see here on the chart exactly what I was saying, that Sofi spent a lot of time down here in the $6.30 range. I got in a lot of shares down here, and I also got in a lot more back here somewhere. So my average cost is around $6.35. And the stock has consolidated a lot down here at 640, 630, all the way up to 675, but it spent a considerable amount of time up here at 760. Overall, the median average price is right in this area. So $7 to $750. Once Sofi falls below $730 or closer to $7, if it even comes back to that point, I don't think it will. It looks like we might get a pullback into the 720 range, 725. If it does, I'm going to be adding more, but this time in my challenge account. I believe in Sofi. The 1-year price target is a little bit low. I don't see 814 being the 1-year price target. I believe the price target for Sofi is about $8 to $9 by the end of the year. And by this time next year, more in line with $10 to $12, maybe even more bullish than that. Now, because Sofi has a negative 29-cent EPS in October 2023, we really can't gauge it because it pulls all the other numbers down. If they get 4 cents like they should in this quarter, then that's going to be an average of 4, 5, 6, 7, 8, 9 cents for the year. Then we're going to divide 9 cents into 748. So if all goes well in the next earnings, they have a PE ratio of about 83, which is not that bad. I mean, it's a little rough, but it's better than a lot of other companies. So how do we gauge this stock if the PE ratio isn't the greatest? Well, we do price to earnings. We take market cap, which is $797 billion, and we divide that by their yearly total revenue, which is $3.40 billion. This is the trailing 12 month. We divide that in. We're going to divide by $340 billion. and we get a price to sales at 2.3. And this is a very, very strong price to sales. Based on this price to sales, SoFi could achieve a $12 price target as they become more profitable and things work out in their favor, like student debt and loan forgiveness goes away. The on-ramp gone on September 30th. Rates continue to get cut and student debt is paid down. SoFi will flourish. This is going to be an exceptional stock in the coming 6 months to a year, which is why I highly recommend having a stake in SoFi. It is my number 2 main stock to invest in right now. So you can outright buy the shares on SoFi or you can sell puts. I think selling puts is pretty strong. I might actually sell puts today. By the time you see this video, very likely I've already sold puts, and I intend to sell 750 puts just to print premium and get into the stock. These puts will print about $15, which gives me an average price of $7.35. If the stock stays where it is or goes slightly above, I won't get a sign, but I get to keep the premium. If I was to go out to next week, which is even better, I could sell 750 puts, giving me an average cost of around $7.25. I think SoFi is very strong, so I'd like to go out 3 weeks to the end of the month, and I would like to sell $7 puts and 750 puts. This will give me an average cost of just over $7.13, which is pretty good. If I sell the $7 puts, it gives me an average price of around $6.83, which is very strong, a good way to generate premium. We could go out 30 full days in order to take more premium on the $7 put. But I do recommend selling 750s at this point because you'll collect $40 or $45 depending on where the stock price goes. If it drops a little bit today or tomorrow, this will give you a nice 1 month return of about $40 to $45 on $700, which is pretty good because $70 would be a 10%. So this is about roughly 6 to 7% return in a month, which is really good, really safe. And I don't mind doing that because I believe in the stock. So I'll just pick 45 cents, which means the stock price will have to drop to about $7.40. If it does that, I'll get filled and I will do 20 contracts, which will give me a nice premium of almost $1,000 for the month. If I get assigned the stock, I have an average price of $7.20. If I don't, I make almost $1,000 or $900. Juicy premium in 30 days, and 10% of 14,000 is 1,400. So $900 is about a 6.5% return, which is very safe considering this is a delta of 47 on a very strong stock. 47 is aggressive delta, but on this stock, not so much, especially if you believe in it. If you want to be safer and sell a $7 put going a month out, this is a 28 delta. It's very safe. You can wait for the stock to drop a little bit and try to get filled at 22, and I could sell 20 of these. This would bring in almost $450, $440 to be exact. We could actually wait for maybe the stock to drop a little more and make $460, but it depends on where the stock goes today and tomorrow. I'm waiting for a little bit of a pullback to enter on some puts, but it's a very good stock to sell puts on. Like I said, you could also just buy the stock outright, which in my opinion is solid. If this was to have a little bit of a pullback over the next couple of days, or PMI data isn't good, job data isn't good, and SoFi drops to $7 or under $7, I will buy it up like crazy in this challenge account, which is basically over $130,000 tomorrow. I'll be able to put some love into SoFi here because my $2 million account already has 10,000 shares of SoFi. So I definitely want to add more of SoFi. Next, we're going to talk about the stock that I believe you should buy immediately. The one that I talk about the most. The one that I'm constantly making videos on. This is the best stock that you should be investing into right now. You guys probably already know what it is, don't you? See, I knew it. I knew you guys knew what it was. There's no point even doing this. I guess this video's over. See you guys. Just kidding. What, you thought I was going to leave you? Oh, no, definitely not. We know what I'm talking about right now, and it is Palantir. Palantir is the stock that you need to add right now. There's going to be a little bit of a pullback coming somewhere between 28 to 30. It's kind of likely at this point, but now is the chance to get in. I have 6,000 shares of Palantir, my large account, average cost under $22. It's like $21.75. This is a great stock, and the growth is going to be incredible. Their market cap is now up to almost 80 billion, and they were at 50 billion market cap just about 4 or 5 months ago. This is a stock you don't want to miss out on. It's likely to hit a 250 billion market cap in the next 1 to 2 years, and this is likely to be a 3 to 5x return in the next 2 to 3 years. They also have a contract with the government, Project Maven, going all the way out to 2029. They have enough customers right now to meet demand to have consistent year-over-year growth and profits for the next 4 to 5 years. It is highly likely that Palantir is going to hit 40 to to $45 by the New Year's. If it doesn't by the spring, it is even higher probability of that happening. By next summer or end of next summer, I anticipate Palantir to be somewhere between $50 and $60. This is a great stock to invest into. I anticipate by the end of the year, the stock being between 40 and 45, and a year or two out, it's likely this stock could be somewhere in the $70 or $80 range, which could be a 2 or 2.5 times return. This is a very solid stock to invest in, very solid company, and great values, great overall growth, and spearheaded by great products and a very good team led by Alex Karp, who some say is unhinged, and I do believe he is in certain ways or another, but very strong. Peter Thiel and Alex Karp, very solid leadership. I don't recommend selling covered calls in this stock, as if you sell covered calls and you lose your shares, you lose your dollar cost average, then you got to sell puts to get back in. If you intend on selling and running the wheel strategy on this stock, then that's fine. But I highly suggest stockpiling. Like I said before, just stockpiling this company into your portfolio, adding shares, dollar cost averaging, and continuing to add to your position. Let's take a look at the chart, look at some financials, and show you guys how to sell puts and get into Palantir right now. We can see how much growth Palantir has had over the past 7 or 8 months. Since the beginning of this year, they've went from $17 to almost $34. It's actually $33. There's almost a 2x return in 8 months. Anyone who invested in Palantir back between $17 and $20, and even myself at $21, you're up a considerable amount of money. I'm up a lot. I've made like $20,000 in profits on Palantir this year alone in my big brokerage. I've actually made a little bit more than that if you include the wheels strategy. The puts that I sold and the calls, it's probably closer to $30,000. And as we can see, there's a lot of support. It's highly unlikely that Palantir will ever break $20 again. I mean, it could, but highly unlikely. It dipped down here. Almost looks like a liquidity grab here when the stock market's pulled back on August 5th. And the stock ran again, and we have a lot of support at 26. We have 20 and 26 as solid support levels. And now we've tested 1, 2, and 3 times right around $30. So $30 has a lot of support, but I think it's going to break that and fall down to about $29, which you can see has a lot of support here and here. So it is likely that we could see a fall down to $29, which is exactly where I expect it to go. $27 down here is also possible. Between 27 and 29 is my new price entry target. This is where I'd like to get in. Let's go ahead and look at price to earnings. Over the last 12 months, we are going to look at the EPS, which is 18 cents over the trailing 12 months. But that's actually going to go up over the next few quarters. But right now, as we speak, it is 18 cents. I'm going to double check to make sure they got their math right. 7, 15, 23, 32. It's actually 32 right now. So you see, I'm going to go off of not the trailing 12 month. I'm going to go off of the active last 4 quarter reports. So that is 32 cents into $30.59. 30.59 divided by 32 cents is 95. Not a very good PE ratio, kind of rough. When I got in at 21.75, divide that by 32, 67, much better. So based on PE ratio, fair value, if you're not pricing in any future guidance at all, just what it's worth right now, Palantir is worth about $14 to $15. But with the future guidance in play and them expecting to go to 50 to 60 cent 12-month trailing EPS, then that changes the game, because at 30.59, we're going to divide that by a 48 cent. I believe that's where they expect it to be for 2025. That's a PE ratio of 63, which is still a little high, but it gives it a fair value of roughly $17 to $20. So it's getting a little higher. But then again, that's just off basic guidance over the next 6 to 12 months. Now, what do we expect out of Palantir if we were to check out the price to sales, which gauges future growth potential? We already know this stock is strong. It's got a lot of baked in future premium based on guidance. But let's take a look at their market cap, 68.5 billion, 68.50 billion, which is right here. We're going to divide by revenue for the trailing 12 month, which is 248 billion. Price to sales is 27, which is a little on the high side. Their price to sales is 3 times higher than Apple and a lot higher than Sofi. Technically speaking, Sofi has stronger price to sales and slightly worse PE than Palantir. However, Palantir is sitting on $4 billion in cash with no debt. They have a lot of assets. Their income is growing. The commercial and government sides of the business are 50-50 now, basically. And their top 20 customers spend 20% more year over year. Their growth is incredible. So if we were to price in the next 3 to 5 years guidance and where it's going or likely to go, and the fact that it's AI, then it's very much worth $30. But right now, the way it sits, it's a little overpriced to a degree because you have to understand what you're getting with Palantir. You're getting a lot of future baked in premium to a company that has so much potential and has a very high probability of success. In about a year to a year and a half from now is when Palantir will grow into its current price. So as you're buying up Palantir right now, in 6 months to a year, the stock price will have risen to $40 or $45. And again, that will be based on baking in premium and guidance 6 months to a year or further out at that point in time. I know this sounds confusing. If you buy Palantir now, you will be on the road to success, as Palantir is a solid company, growing exponentially year over year and quarter over quarter over the last couple of years. When this train leaves the station, you don't want to be saying, I wish I had gotten on before it was too late, and I did not. You don't want to be sitting around saying, oh my God, Palantir's at 45, now I should get in. It's already moved over $30 at that point. It's good to start selling aggressive puts now, collect all your premiums, and try to get a break-even price between $27 and $30. And if there's a pullback and the stock falls to 25 or 24, sell a lot more puts or buy more shares to dollar cost average, add to your stake and your stockpile of Palantir. If you want to get into Palantir, let me show you guys what I would do. Right now is contemplating selling aggressive $30 puts one day out and collecting $53 premium. I'm really thinking about that, but you can go out to next week and you can sell $29 puts for $55. This is really strong. I would go out 2 weeks and I would sell $28 puts for $48, which is a delta of 21, or you could do 29, which is a delta of 30. This is going to give you an average price of $28.24. This right here will give you an average price of $27.50, which is solid, but I'll probably sell 5 of these for $250. And then I will sell 5 of these to collect $400. This is $650 over the next 2 weeks. If I get assigned, it will give me an average price of $28.50 minus all the premiums. So $28.50. Let's take a look at this. $28.50 average cost times 1,000 shares. 28,500 minus 650 is 27,850, giving us an average cost of 27.85, which is pretty strong considering where the price is right now. So just by selling 29 and 28 puts right now, going 2 weeks out, we would have an average cost of 27.85. Even if you only did 2 contracts or 1 contract each, your average price is still going to be 27.85. Now, if I was to sell more, going out a few extra weeks, I can make even more premium. But what I would like to do is sell these 5 puts at 29, 5 puts at 28. In 2 weeks, if I get assigned on the 29, but not the 28, let's say the stock falls to 29, then I will sell a couple more 27s and a couple more 26s. This is how you get premium and you dollar cost average. That is what I would do right now. I would start looking to have your entry point on Palantir, as it is a very strong stock. If all of this is confusing you and you don't quite understand these stocks, the deltas, the options that I'm showing you right now, I would love to help you, fam. If you are serious about your financial health and your financial future and you're dedicated to getting better and learning, I would love to help you. I offer a full training course, Discord, and one-on-one coaching. I'm driven every single day to help others just like you. You guys can sign up at investorcorey.com right there on the screen, or the link is in the information box below. Like I said, I do not recommend selling covered calls on Palantir because of the fact that it's a growth stock, and unless you're specifically running the wheel strategy, then I would just pile in the shares and add to your position, as ultimately that's what I'm doing. Remember everyone, free webinar this Friday, September 6th, 7 p.m. Eastern Time, 4 p.m. Pacific Time. My masterclass webinar, very limited spots are available. Do not miss out. The link is in the information box below. Sign up, check your email, check the spam. Make sure you're signed up. Very limited spots are available. When the registrations are full, we will be taking registrations down and locking it, and you will miss out on this webinar. You will learn more in the hour that you're with me on this masterclass webinar than you will learn anywhere else. You will even say so yourself. Everyone who joins my webinars say the exact same thing. You guys are going to have a lot of fun and learn a lot. So bring your thinking caps. I can't wait to see you guys this Friday, September 6th, 7 p.m. Eastern, 4 p.m. Pacific Time. I'm going to host a Q&A where you can ask me any questions, and I have a massive announcement during the webinar. We'll see you guys on the next video. Remember guys, hold on to your Sofi, add to your position, do the same thing with Palantir. These are two incredible growth stocks and my two favorite stocks that I'm buying consistently right now, and you should do the same. We'll see you on the next one.